when you mentioned that, I was like, man, Omar, he's sitting right here. Like, don't tell him an AI is going to take his job. But
We crunch all of those numbers and really kind of go hand in hand with Aave on any deployment for any asset on any network.
100 million worth of Go provides the same revenue for the Aave DAO as 1 billion USDC.
one of the few DAOs that has stood the test of time and continues to innovate.
Welcome back to The Roll-Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Imagine if the world's GDP moved on chain. Guys, say GM to SafeNet. The newest protocol by Safe isn't a blockchain and it's not a new layer 2. It's a transaction processing network built to send money anywhere and swap anything on thousands of layer 2s from a single universal balance in sub 500 milliseconds. It's fast, it's smooth, and it's simple. And it's built with safe multi-sig level security in mind. SafeNet unlocks smart accounts across multiple chains, allowing users to supercharge security, scalability, and speed. So get started today at net.safe.global and remember to follow @safe on X. GM, welcome back to the Roll-Up. Today we have a very special two guests. We have Stani from Aave, of course, and Omer from Chaos Labs. And we're going to be talking a lot about Aave's recent developments, Umbrella. We're going to be talking about what that means. We're going to be talking about macro a little bit and the relationship between Chaos and Aave. And there's been a lot going on in DeFi as of late. We have DeFi AI, which is a new development as well. Maybe we'll touch on that a little bit. Stani, welcome back to the show. It's been, I think, a few years. Maybe a little bit of a backstory is DeFi Slate was one of the original recipients of an Aave Grants DAO grant for DeFi education. And just want to say, that really kickstarted what is now the Roll-Up. So thank you and welcome back.
Thank you for having me here. And it's really amazing to kind of like see how much like time has progressed since then. And I think DeFi is growing to the right direction, but also it's nice to see how a lot of the ecosystem is maturing as well. But yeah, good to see you again. It's really cool to be here.
Yeah. And Omer, welcome to the show. I think first time. And maybe you can tell the audience a little bit about yourself since it is your first time, and we can get into it.
Yeah, thanks for having me. Glad to be here. A quick background about myself is spent the early days of my career in startups, mostly cybersecurity and performance. After that, I've spent about 4 years at Facebook and Instagram as a tech lead and architect. Again, working on security, optimization, performance enhancements. And about 4 years ago, left to start Chaos Labs. Today, Chaos Labs is the industry leader in on-chain risk management, primarily financial risk management. And we've built a platform that behind the scenes powers much of DeFi. So we have the privilege of working with applications like Aave, GMX, Jupiter, EtherFi, Renzo, DYDX, Venus, and a long list of great partners. And our risk oracles effectively and price oracles stream data on chain so the applications can react in real time to what's happening in the market. That's the high level overview, and we'll probably get a lot more into it through the podcast, but glad to be here.
Absolutely. Glad to have you here. And yeah, my experience is I kind of got my start at TradeStation as an online stock brokerage. And I was still in high school at the time. It was my first exposure to any kind of global risk management, walking in and seeing this like massive monitor that kind of had all of their servers and everything was running. It was all a very elegant system that they had put together. Fast forward to now, we have blockchains that do this at a peer-to-peer worldwide scale, which is incredible. And so we'll talk about risk management here. We'll talk about Chaos Labs and what kind of work you guys do with Aave. And before we do get into it, happy birthday to Aave, which turned 5 years old. I think just this past week. So it has been a lot of time that has progressed. Stani, maybe you could start by talking about, some of the highs and lows over the last 5 years, and ultimately that has gotten you to where Aave is today?
Yeah, it's interesting story, and it feels just very recent that we started build Aave, and now kind of like fast forward, there's 5 years uh, in the making, and Aave has kind of a interesting and unique story in the sense that even before Aave, back in 2017 and even earlier, um, we started to basically work on the idea of democratizing finance by bringing a lot of these financial primitives to on-chain. And we're talking about timeline where Ethereum was starting to Ethereum was launched in 2015, and it started to get more traction on the application surface, and there wasn't really that many directly DeFi protocols or applications. In fact, the whole terminology wasn't coined yet there, but there was a lot of interesting things happening. And for us, what was exciting is that we were thinking how we could actually bring these different financial behaviors onto the blockchain and actually just create better, faster, stronger finance. And this was the time when you didn't have absolutely any liquidity on chain. In fact, you didn't have stable coins on Ethereum at that time. The only stable coin that existed was Tether USDT on a separate omni chain. So it was traded mainly on centralized exchanges. So the world was really different back then. So I think for the first 3 years, we tried to really figure out how we actually build something really appealing for the users. We had ETHLend back then, which was more of like a peer-to-peer type of model with smart contracts, and it worked up to, I think we had at the highest 5 million TVL, which at that time was significant. Probably the biggest protocols had 35, 40 million TVL at that time. But one of the challenges was actually to build something that really creates stickiness for the users and really high utility. And I think part of that journey was that COVID started pretty much when we launched the protocol, and a lot of people were at their homes, trying new things, trying DeFi, and DeFi summer kicked in, and that was absolutely a nice high for everyone, including us, down the line. But now the main focus has been purely of like thinking, what is the average user type on Aave, and how do we make that experience and economical behavior much more better and scale that to a bigger audience, essentially. So it's been quite a long path to come here, but I would argue that the most of the work is still ahead of us.
Absolutely. There's been, so much work that you guys have done generating more adoption. One of the most widely used applications in DeFi on Ethereum, and not just Ethereum, but other rollups as well, and even branching out further. And it's really demonstrated one of the core primitives that's available on chain. But there's a lot of changes. You've introduced Go. You're introducing stablecoin economics. You have this robust liquidation mechanism, and there's all of this infrastructure that has came out on chain, and you guys have been able to evolve alongside of this ecosystem. So kudos to being one of the pioneers that helped start it all. But it hasn't, gone without trials and tribulations, and that's where Omer, Risk Management, and Chaos Labs, you guys have been able to come in and provide a more comprehensive look at the entire system, not just Aave, but on-chain globally, with a focus on Aave. And so maybe you could talk a little bit about the work that you guys provide for Aave specifically, and then I'd love to discuss kind of how the engagement with the DAO, given that you guys are kind of a third-party entity, if you will, how that experience has been as well.
Yeah, would love to. So really, I think, first of all, when we talk about risk is often an umbrella term, and it can encompass a ton of different things. What we're focused on at Chaos is really kind of market risk, liquidity risk, Oracle risk, smart contract risk to an extent. But basically all of these things that we're thinking about constantly. When an application like Aave has found product market fit and it's trying to scale, how do we make sure that all the building blocks exist such that it can do so in a secure and scalable way, always with user safety and safety of funds at the forefront of everything? So that's at core, like what we try to do is make things secure and scalable so that they can meet the demand that's incoming. Now, there are a few different ways that we do this. First of all, everybody knows that the crypto markets are extremely volatile and oftentimes wild. Much more than the traditional finance markets and kind of markets that existed for longer. And because of that, the core of our system is automated risk monitoring and parameter optimization. So I'll give like a very simple example to kind of drive it home. Let's say in Aave, there's a money market for Bitcoin, right? So in this money market, you can deposit Bitcoin as collateral and borrow against it stables. Let's say USDC for this example. Now, there's a core question here, like what is the amount of credit that the protocol should extend against Bitcoin that was deposited, right? So how much are we going to let them borrow?
And this is, and Omer, are we talking about Bitcoin or are we talking about wrap Bitcoin?
Wrap Bitcoin, but just as an example, it could be any asset, right? Aave is actually like, it's also cross margin, but I want to make it like really simple just so people can understand. So in this example, right, like one asset is deposited as collateral, you want to borrow, the ratio between that's table stakes for a protocol like Aave because much of the business model is interest off of the loan. So on one hand, you want it to be a lot of credit and give a lot to the user. On the other hand, the more that you give and the larger this leverage is, the more exposed you are to fluctuations in the market. So Bitcoin is volatile, it can go up and down, and you can really get to a point, if it isn't managed properly, that the borrow that you've sent to the user is worth more than the collateral, which was deposited into the application. Therefore, worst case, insolvent across a specific position. So we run all of these algorithms, all of these models, Monte Carlo simulations in the background, and we give them very actionable data points. This is how we recommend configuring this market. This should be the supply cap here. These assets are safe for listing either in an isolated fashion or a cross-margin fashion. We crunch all of those numbers and really kind of go hand in hand with Aave on any deployment for any asset on any network.
I would say that's do you understand kind of like the magnitude is here that you have this like a dynamic world, which is not just DeFi, but like finance in general. And in this dynamic world, you want to do different types of financial behaviors, and lending is one of them. So we're using on-chain, we're using smart contracts. So we're creating basically rules that are either immutable or can be enforced by certain type of a governance framework to ensure that there's no kind of like a single point of failure or minimizing the single point of failure of the system. So when we are in this dynamic world, it's really important that we're able to actually apply those changes that happen in the financial markets into these lending agreements that are created with smart contracts. And the reason for that is if you have parameters that you agree upon at a certain point, let's say as of today, the market from 6 months from now can be completely upside down. And if you're locked into parameters, you create kind of like a really difficult place for not just the borrowers, but also the lenders. And price feeds are one example of this, and also risk parameters, another example of this, where you need certain data to be injected that you can regulate these parameters and ensure that you're correlating what's happening in the market. Because if you aren't, there's a risk that basically the system might lead bad debt, or someone has to basically pay for that situation where the markets aren't reflecting in those agreements. And I think that's what everyone who is interacting with DeFi or any type of a financial agreement, they should basically realize why it's important.
I just wanted to quickly add to what Stani was saying, that like, that is why it's important. But I think what people often miss when they think about like Aave or lending markets in general is the scale. The scale is incredible because Aave is going to be by the end of the year deployed on 20 plus networks. on average, every network might have at least like 10 different money markets. And every money market could have, let's say for easy math, up to 20 different parameters. That's 4,000, that is 4,000 parameters that need to be updated in constant correlation to what's happening in the market. So there's really no way to do this if it's not automated. You don't have enough humans like in DeFi to do this in a way that's secure. And Aave has really pushed the boundaries and is really kind of leading in terms of adopting that like automated risk Oracle infrastructure on chain. And it's what's allowing it also to scale so well.
It's incredible. Like just to think about the time that has passed, when ETH Lend was first on and maybe in the first iterations of Aave, it was the idea that we could reach this level of scale in a programmatic way. We were swimming against the tide. But I think at a certain point, there was this inflection point. We're either around it or we've already hit it or it's coming up soon, where we're now doing things that traditional finance could not do in a programmatic way. And we're doing that because it's programmatic. Whereas before that was a hurdle. Now it works in our favor that we have this network of resources that has reached this level of maturity. And I think now that will only continue to accelerate. When it comes to risk management and dynamically updating this set of parameters across multiple networks, across multiple different pieces of infrastructure, how do you balance dynamically updating and sometimes these are urgent things that need to be fixed or reset with the idea of governance? And when it comes to something like a new chain or a new parameter that needs to get updated, what is the ratio or the balance there between dynamic global risk management and updating and governance with the community?
Maybe I could quickly say something about the governance piece, because it's quite important in the sense that the every risk parameter that is affected through into the Aave protocol has to be like carefully thought about, has to go through a proper due diligence reviewed by risk providers. And this system has worked really, really well. So like, just if we look into all of these years of crypto lending, using crypto as a collateral to borrow, a lot of the early adopters of this business model were actually centralized businesses. Celsius, BlockFi, Triaro Capital run the same model, Genesis Lending. We started with Edlin at the very same time, but many of the centralized models actually took off because there's less of user friction there. But what we realized over ups and downs, what we saw, for example, in 2022 with FTX and different market movements, is that actually Aave was resilient across multiple networks and withstood the market changes. And when people ask why, one of the biggest reasons is that when you actually do decisions as a collective group of people publicly, and you involve diverse set of contributors, and also the token holders, and different parties that have delegations, you get a outcome where there's a higher accountability, and also this competition of actually ensuring that we have the best kind of like abilities to perform these parameters. And that's how like the whole choosing of risk providers happens in the Aave DAO. So that being said, what's interesting within Aave DAO is that there's delegations of actually governance as well. So not every single decision on the Aave DAO needs to go through full governance. Instead, that the Aave DAO can actually delegate the governance power to risk managers, for example, as risk administrators. And this is where, for example, there's a set of a framework of delegations where you have a price and you have basically a floor and a ceiling where you can adjust these parameters. And then risk providers such as Chaos Labs comes with their model effectively and automatizes those changes in the between the floor and the ceiling. But that's the part that Omer knows the best in this room.
No, very, very well said. Very, very little to add to it. I think that just one thing that's important to when you speak about the success of Aave, it's uh, obviously they're individual contributors, but I think what makes it like special is that it's actually, I would argue, the best functioning DAO or example of a DAO that's worked, because you really have different working groups that are world-class experts in what they do. And this is why V3 is where it's at, and this is also part of the very large excitement for V4. But the way that we've done this, right, is I think one of the core tenets of immutable or open finance or decentralized finance or on-chain finance is that there's transparency. Now, hooking up like a server that's pushing like real time updates on chain may solve for some type of like security or kind of risks, but you don't want a situation in which a single entity has carte blanche and can do whatever they want through the application on a wins notice. So BGD and Zeller and Stani and Navarro spent a lot of time over the years crafting this framework. And the way it works is that for every single parameter, as Stani said, there's a bound. There's a floor and there's a ceiling of a change that you can make. Now, these changes, as long as they're within the bounds, they can be pushed optimistically. So when a user opens up a position on Aave, they understand already what are the ways in which the position or the terms of that loan can change. And these can be done by a risk manager. Now, there's a specific set of parameters that may significantly alter the terms of the loan. And these cannot be pushed in real time. They will require a full governance cycle. So let's give an example. A good example is a liquidation threshold, right? So liquidation threshold, if you're reducing it, you can't do that unilaterally because you may liquidate users who weren't aware of these terms when they opened the position. So that would require a full governance cycle. But things that we can update in real time are things like interest rates. There's crazy demand and a lot of liquidity for LRTs or LSTs in the market. Well, Aave should be able to react to this demand in a positive way. This we can update real time. Supply, borrow caps, all of these things, which is the vast majority of changes you want to make. So that is the delineation. And really, like, this is the reason this is possible is because you have Avara, BGD, ACI, and Chaos all working together to put together a framework which is transparent.
Yep, amazing. Um, that makes a ton of sense. And guys, there's a lot that I think we want to get through. So I'm gonna kick it into the next gear here. As we move to V4, this is one of the most exciting releases for Aave that has gone out, in recent memory. And I remember Aave V3 and pools and farms, like everything was really exciting about that upgrade too. And I feel even more excitement around this one. And so, let's dig into V4 a bit. Stani, could you just kind of, explain in your perspective what this means for Aave?
Yeah, I mean, V4, it follows quite a lot, like the way we see it from like the Aave Labs perspective. It follows the whole path of like what we're always focusing on every iteration, which is mainly on the users. What actually creates a better utility for the users, how we can improve features, improve the pricing of the liquidity, and improve the risk management tools within the protocol. So Aave V3 obviously has been really groundbreaking innovation in DeFi. And because of the features that Aave V3 has, it has been able to capture a lot of the liquidity. In fact, most of the growth for Aave happened during the 2024. A lot of the drivers were because of the features like E mode, which is a high efficiency mode on the Aave V3 protocol that allows you to get highest capital efficiency with correlated assets, such as, for example, if you're supplying stablecoin to borrow another stablecoin, wrapped called ETH, supplied to borrowed ETH, as an example. That's why there is a lot of that growth happening because of those features. Arguably, there's also features in the Aave V3 that could even bring more of growth. For example, the portals for cross-chain liquidity management that we haven't really been focusing or utilizing, but is really interesting feature. V4, in the same way as one of the evolvements last year was also that we started actually seeing Aave DAO using the Aave V4 infrastructure, the protocol as a more of a infrastructure as well. So creating new markets on L1 on Ethereum and doing new deployments, which is quite incredible. So Aave as a technology is something that can be used to creating these lending markets, or you can use it to create lending markets that has a more opinionated product offering, essentially, which is what is happening now. Aave V4 is more of trying to double down on the risk management and capital efficiency, but also allows the users to actually position themselves on the risk curve. Currently, we do that by creating different other markets on V3, but V4's architecture is a little bit different. So it relies on a concept of a hub and spokes architecture, where you have one main liquidity hub, so one single entry point for most of the liquidity, and then you have liquidity spokes that actually are consuming the liquidity out of the hub and have different kinds of risk profiles. You have also ability to create your own liquidity hubs, and these liquidity hubs can allocate liquidity to each other as well. So think about it as a similar type of a model as airliners and airports. So going point to point might be expensive and high cost. The same way in finance that you might not get the same liquidity at the same price. If you will have to go very granular, borrowing, lending, one asset, one position, and have that really high segregation. So what we wanted to retain from the past with the Aave V3 and previous versions is the network effects of liquidity. So one of the reasons why Aave is a popular protocol is because you can find the liquidity there. So if you come with a smaller sizing or even large sizing that you need to borrow, you will find that liquidity because it's very well concentrated. So we wanted to keep those network effects, but at the same time, we wanted to ensure that users are able to choose where they position themselves on a risk curve. So you could supply liquidity on the main liquidity hub, subscribe to a certain risk position. The liquidity hub itself can actually supply into more, with a limited amounts, into more riskier spokes, meaning that it can enhance the liquidity hub, or you can supply to another one. But it doesn't break down the concentration of liquidity, which makes it really powerful setup. And the second very important feature is that now when you borrow in Aave V3, you can't really price the borrowing based on your collateral position. So let's say that if Omer goes to Aave and borrows USDC against ETH, and someone else comes and borrows USDC against a little bit riskier collateral, they will pay the same price of that. So in the future with V4, the users actually are paying a base rate if they're bringing the least riskiest collateral position, and they will pay a risk premium based on their collateral position. And this allows the protocol to price risk and reward more accurately and create more earnings into the protocol that then accurately go to the depositors itself. There's a bunch of other features, but I don't think we're going to have time to run all of those. But those are the two main things that I think are going to be super valuable for users, normal users that are in DeFi, or even institutional users.
Cool. Stani, yeah, that was a great overview. And we'll hear from Omer here shortly, from some more of the risk management side. Stani, I do have some questions for you. So I heard Omer a little bit earlier talk about how, we're going to reach 20 plus chains with Aave deployed, which is a great feat coming from, a multi-chain world. And if we kind of look down the list here, you recently posted, and it's funny because you have a couple of Bitcoin L2s here, but it's refreshing to hear you say it's all Bitcoin. But Rootstock, BOB, Build on Bob, Mantle, Sonic, Cello, Linea. These are all places Aave has started to progress down the governance pipeline, and we can expect Aave to deploy sometime soon. And there's one more, World Liberty Finance, which is quite interesting for Aave in particular. What is World Liberty Finance from your Aave perspective? It is very closely. It seems like it's very closely aligned with Aave. Have you had any relationships or what has been the experience kind of like as World Liberty Finance has been built out? What has been the connection or relationship that it has had with Aave? Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today. Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fraxtal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fraxtal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fraxtal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fraxtal mainnet. Bridge your tokens and bring your Frax assets into the Fraxtal ecosystem. Join today to get the best out of Fraxtal. You are still early. Join today. Take part in our expedition into the singularity.
Yeah, I find it's really fascinating because the World Liberty Finance is essentially a instance of Aave specifically for World Liberty Finance. And the way to think about it is that as we go back to what I previously was explaining, that you can see Aave as a product, like a protocol type of a product that anyone can connect, interact with, supply, draw liquidity, pretty much like across all of these different networks. With this specific deployment, that team particularly is using, because they love so much Aave and how it works and all these years how it's been working, they actually want to use the infrastructure, the technology itself, to create their own markets. And there's definitely like a demand for those types of deployments, and we see regularly in the Aave DAO someone raising the topic of actually creating a new instance, and the DAO has been very open to those kind of opportunities. With this specifically, I find it interesting because it does create a own type of an audience that could be onboarded into DeFi. So one of the things that I've been talking quite a lot in the past and more recently is that we are kind of living in a transformation where we went from basically paper trading, paper agreements to digital agreements based on databases in finance, now starting to move actually onto a new substrate, which is the onchain. We've seen this obviously with all the innovation that is happening so far in DeFi, but we've also seen this with RWAs, seeing actually more these assets coming on chain while being offered also off chain at the same time in parallel. And with World Liberty Finance, their mission is actually to expand on this idea where they bring DeFi closer to their audience and users. And I think we will see more these types of initiatives in the future. And V4 itself is going to make it much easier because you can simply create your own liquidity hub that you can manage, and then choose to which kind of a market to allocate based on the risk positioning. So I think it's win-win for everyone. End of the day.
Have you had any like conversations with, the incoming president or government? Like, is there any like any pieces or information that you can give us as to like how deeply ingrained we can expect World Liberty financial chain into like the American like economy, if you will, or American banking system?
I think the road is still. I think that I think it's an ambitious team, and I think they will get a lot of things done. But I want to remind that whether it's like World Liberty Finance or Aave or DeFi in general, uh, we still have a long path to go. So DeFi today is at um, it isn't yet in a even all-time high of the previous peaks. Um, and if you look at the whole size of finance today, getting everything on chain is going to be decades of work eventually. So I think there's a little bit more hope now with the new administration, and I do think that the ETF has been a big driver as well for the whole crypto space. But it's going to take a little while when we see most of the finance being actually in on chain.
Yeah, absolutely. And that's part of, what you said earlier about still the work to go is much greater than the work that has been done, which is very exciting to see how far we've come and think that, we've got so much further to go. Um, awesome. I've got kind of a two-part question. It's related to the World Liberty, the way that architecture seems to be playing out, and then also Aave's tokenomics. Um, you mentioned how the Aave DAO has been quite open to explore some of these instances where, a new iteration of Aave is deployed, one that's a little bit more customizable. You can create new pairs in the instance of World Liberty Finance. Um, and some communities are not as friendly to, what you could consider a fork. And so I'm curious if there's competitive nature here. And the second part to this question is kind of a flip side where, Aave has started to delve deeper and deeper into the stablecoin route and explore more and more tokenomics built around Go and around stablecoins and monetizing that way. Um, and similarly, we have like traditional like stable coins, US dollars that kind of are free floating in the ecosystem. And so the two-part question here is one, are World Liberty Finance and Aave, or I guess more specifically, is Aave's instance on World Liberty Finance and Aave from Aave Labs, are those two competitive? And then the second part, do you think stable coins and traditional fiat currencies are competitive?
These are really great questions because I do think that's when it comes to like Aave deployments and these friendly forks or instances, I think they're extremely synergetic in the sense that there is a lot of value added to the Aave DAO and the Aave community, while at the same time servicing a specific audience or purpose or some other strategy. And obviously, even though I am the founder of Aave, I'm still one voice amongst the many in the DAO. So effectively, um, there's a process to decide on whether these forks are actually good for the Aave ecosystem or not. Uh, and there are always individual decisions. But what I do think is that they are synergetic. I think and I do think in the future, some of these forks will be more specialized, focusing in a certain area like RWAs and whatnot. The forks that aren't really um, beneficial are the ones where we see teams forking protocols and not really putting effort into the security. They might make some parameter changes or changes in the code base that really creates complicated results anomalies in the code base and effectively adds more risk into the protocol. We've seen that with hundreds of forks happening over the past years, and I think we just have to be as a space mature enough to decide that if you are going to build DeFi, you have to really understand the fundamentals and how to secure these networks, protocols, and ensure that you're providing something really secure for the end users. So that's kind of like my thinking there. With Go, I think what's interesting for Go is that 100 million worth of Go provides the same revenue for the Aave DAO as 1 billion USDC. So the magnitude of revenue for the Aave DAO is so significant that focusing on growing Go, which is a process that's going to take time because you need to play this kind of like a catching game with liquidity over time as you grow the stable coin. But the rewards for that is actually enormous. So if Go essentially grows into, let's say 500 million, it's already earning more than any other stablecoin market on Aave. And in the first place, Go was built for the users in the sense that we found that one of the biggest requirements or demand from the users was to have more predictability on their borrowing costs. And Go fits exactly to that kind of an angle where you also have more predictability on the borrowing costs compared to variable rates, which basically there's a lot of that availability already in the Aave protocol. So down the line, Go will have a lot of focus, but also V4 we make Go integrations more seamless as well.
Yeah, I just want to add on to what Stani said is around like the forks and stuff. And I think, Robbie, you mentioned that not all communities welcome the forks. And I think this is also an area in which Aave is kind of distinct in their approach. So first of all, there's a realization that, Aave is, in its different versions, is the most battle-tested lending infrastructure that exists today. It's been audited so many times. It's been the most heavily used, and that is bar none. Because of that, though, there are different kind of use cases in which new change in ecosystems want to utilize that infrastructure. So really what we put forward as a DAO over the past quarter was the fork framework. And the fork framework basically has 3 different tiers. The first tier is that you can actually work with the DAO to have an Aave instance, completely Aave deployed on your network. And what that looks like is working with Chaos, Avara, the ACI, BGD, and really set up like an Aave instance on your chain. The second is what is called a white label. And that is what actually the World Liberty Finance has done. So there are teams that might be either really opinionated on the marketing or maybe the specific risk profile or type of assets that they want to set up. They still want to have the benefit of having the world-class operators and code base, but they want to do more maybe on the BD side. So here there's some type of rev share that's like negotiated between the DAO and World Liberty Finance in this case. It's Aave for all kind of sense and purposes, but with different branding and different BD and growth teams leading it. The last is the friendly fork. So this is like applications that will not get the operating team of Aave. They just simply want the code base. And then there's some type of kind of minimal rev share agreement there. But once they do it, they're on their own. Historically, what we've seen is that these have not kind of worked well for most of the teams because Aave is not just like a simple application. It's actually the culmination of many, many years of engineering and a ton of kind of different security measures and guardrails. And teams that do this need to understand that they must invest to get up to speed with all of the internal kind of knowledge that the Aave DAO has amassed. Otherwise, to Stani's point, it doesn't end well. So typically, teams that really want to do things well, we see them either go for a setup that's similar to what World Liberty Finance has done, or just a proper Aave deployment. But what's important is that it's not just turnkey, fork this, and you're good to go. You need the team to bring all of the expertise and experience in order to run these, because lending, as we see in the centralized world, where in many cases it's much easier, is a risky business.
the CT warriors are going to come at me for definitions, but it feels a lot like L2s and L1s. Like World Liberty Financial instance of Aave is almost kind of like an Aave rollup. You can have more customizability, but it ultimately has some sort of revenue share, like you said. We see this a lot on Optimism, right? We have Optimism super chain, but then there's a revenue share program for all these rollups that are deploying on top of OP Stack, and they're paying the collective this revenue share um, uh, to ultimately give value to the ecosystem that kind of gave birth to that rollup. And trickling down, we have L2s and L1s that are ultimately they're paying something to the Ethereum L1, maybe it's DA. They're paying this rent in order to inherit some level of security. And so very similarly, you mentioned the three tiers of these forks with kind of varying levels of association with Aave DAO. It makes a ton of sense. And that answers the question very concretely, like, no, these things are not parasitic, to borrow a word from the toxic CT community. Like these things do have some give and take here. What is the revenue share between World Liberty, and I'm sure we could go investigate it in the DAO, but like what is the revenue share between World Liberty Finance instance and Aave DAO?
Yeah, specifically, it's a combination of the reserve factor and also the token allocation of the World Liberty Finance, which is 7%, if I remember. Looking at,
I think it's 7. Yeah.
which I think it's a good model to actually use. So if anyone is looking to use Aave and deploy some sort of specialized fork, I personally would like to see some interesting instances specifically for RWAs, because those types of collaterals and setups require a different type of model than the plain vanilla markets that Aave has of today.
Yep. Very cool. So this is a model that you guys are actively exploring, and it's kind of a framework that anyone out there that is open to using Aave, and as they shared, it's the most battle tested framework. They can kind of take one of these tiers, they can fork it, provide some sort of revenue share token allocation to the DAO, and then kind of use Aave at their leisure.
Yeah, exactly.
Awesome. But that, Omer, to your point, does not come with the global risk management, all of the admin overhead, development resources that Aave has kind of baked into its protocol.
Yeah, I mean, like these may vary. Like Stani is highlighting some of the more exciting use cases that we expect to come to market like this year, like RWA. That is a very, very, very different ballgame from a risk perspective than crypto native assets like markets where you can borrow against like Ethereum, wrap Bitcoin, or any type of Bitcoin and Solana. So here it's like, now, history doesn't repeat itself, but at Ryan, we can draw on the experience, and specifically Chaos Labs. Like we work with Aave, but we also work with a bunch of others, so we can bring that experience to the table. But every case of a white label or a fork needs to be examined like individually, has its own nuances, and that's what kind of the DAO aims to bring to the table. We want to give everyone the Aave experience, but also give them the latitude to customize for their unique value proposition and the areas in which they're trying to push forward.
I appreciate the open-mindedness of the DAO here because, like we said, some communities are not as friendly to forks, and they'll just shut it down without even kind of listening with an open mind to the potential of some sort of synergistic relationship between the fork and the originator. So kudos again to Aave DAO being one of the few DAOs that has stood the test of time and continues to innovate. And kind of leading and to our last topic here and wrapping up. We have a incredible pace of innovation in a particular sector here of AI and agents, and this is kind of converged with DeFi and in this, I don't even know how to pronounce it, maybe DeFi, DFAI. And so I'm already starting to see some use cases for agents on Aave. And some more living out there in the wild, not really in prod yet, but are really, really cool to see. Just kind of open conversation. Like, is it real? Is there like some legitimacy here to the DeFi AI thing? If so, what is it?
I mean, I would say that like 99% is bullshit. but the 1% that is not is really interesting. So I do think that's like DeFi is a really good value transaction layer, like moving value programmatically, minimizing trust. So it is a kind of like a perfect setup for something like um, AI agents, essentially. Like you can't do the same things, um, on banking rails, for example. You're like super limited. So it is a really open environment to innovate and to actually automatize or search different opportunities. And I think that's going to be really interesting. Um, I've seen some interesting stuff already built on Aave, and there's a way to integrate. There's projects working directly on and building AI bots on Aave. I think what's going to be interesting down the line is the kind of like a AI risk perspective, because I do think that um, searching for yield, let's say that I don't believe like for bots or AI bots that are just like moving capital for like getting like a few more basis points interest, but I do think that moving positions based on kind of like a risk appetite changes or changing market dynamics is really fascinating. This is more of like a Omersville, but it's something that I think is going to be really valuable.
When you mentioned that, I was like, man, Omar, he's sitting right here. Like, don't tell him an AI is going to take his job. But no, I take it that, Omer, you can obviously elaborate, but AI agents can actually extend the capability of risk management by magnitudes.
100%. So it's like now it's very much in fashion to talk about agents, but the core of the Chaos Labs platform is agent-based Monte Carlo simulation. So we've been doing this from the get-go, and now there's more recognition for this. And even today, people are talking about, what are the real use cases that are going to be in DeFi with AI? And you see like bots that are, like shit posting or kind of LARPing on X, but it's already in Aave. You have risk agents that are writing to the risk oracles, which are propagating the data on chain. So interest rates, for example, on the Lido instance, it's managed by an agent today within the guardrails, right? So it's already here, right? On the biggest lending application, and also for other markets, like perpetual markets like GMX, which are utilizing this. We are like any kind of new innovation, there is like a lot of bullshit that this is true, but we've been doing a lot of research here, and we'll be releasing two very kind of new large projects with this at the forefront this year. Kind of alluded maybe to some of that last year. We did the prediction market oracle, which was powered by AI agents for the US elections with Wintermute and Layer Zero, and also published research with the head of model evaluation at OpenAI for some of the things that we're working on. So not only will it not take our jobs, I think it'll make what we're doing even better. And like it's already, some of it is in production, but we're going to be a lot more open with what we're planning and how we think this intersects with DeFi. So I think the potential is very real.
Yeah, I think it absolutely will. And it's the possibility of distribution for the work that you guys do. It's almost like having a million Chaos Labs in everyone's pocket, right? You guys, have your resources, you commit them to the Aave DAO and potentially a few others. But, the idea that AI agents are able to kind of proliferate amongst the communities here, I think is incredibly powerful. So I really just have one last question. When Aave?
Good question. I do think there should be one this year. It's whenever it happens, I'm gonna let you know.
I'll see you there. DJ Stani. I love it. The little ghost in the middle, just in front of the DJ stand every time. The vibes.
Yeah, that's Ronnie the ghost. Ronnie
Yep.
the rock ghost.
Ronnie. Well, from Robbie to Ronnie, always a good time. And guys, really, really fun conversation. Thank you so much for coming on.
Thanks for having us.
Thank you so much.